Ishita and I'm currently pursuing Bachelor of Business Economics. So, economics is a branch of knowledge concerned with production, consumption and transfer of wealth. First lesson of economics is the issue of scarcity and limited resources. If we use our limited budget for buying one type of good, there is an opportunity cost. Opportunity cost is an cost which is the cost of best alternative which we have left for the option we chose. So, for example, we cannot spend that money for which we buy food on entertainment. So, the cost at which we left entertainment is an opportunity cost. Like we and for a daily for a daily life example, we may like the idea of lower tax income, but there will be an opportunity cost. In this case, less government revenue to spend on healthcare and education. Another example of opportunity cost, no one likes to pay for parking, but would be better off if parking was free. Most likely not. If parking was free, demand might be greater than supply, causing people to waste time driving around looking for parking spot. Free parking would also encourage people to drive into city centers rather than using more environment friendly forms of transport. The result would be that free parking would increase congestion. Therefore, although we would pay less for parking, we would face other indirect costs like our time would be wasted. In economics, there is always a way of looking the world. Borrowing is bad except when it isn't. Nothing is black and white in economics, it depends. For example, government borrowing to finance pension for an aging population can lead to unsustainable rise in government debt. But however, government borrowing during a recession can help the economy recover. If we may, for example, let's talk about uh, the marginal revenue. Like if we like chocolate cakes, first first day we take a chocolate cake and we give it 10 on 10. The second day take that we again take the chocolate cake and we give it 5 on 10 because we have already satisfied our need. Then again third day if we take a third cake, chocolate cake, which might make us sick and give negative utility. Utility is the satisfaction which we get from consumption of particular good, and this is called diminishing marginal revenue. And people may have different opinion when diminishing returns set in. Some students may feel this is after second pint, other student also considerably more. There is also diminishing returns to money. That is why we don't spend all our time working. Extra money gives increasingly less satisfaction and reduces leisure time. Free market has many advantages. Private firms tend to be more efficient, innovative, and respond to consumer preference. However, many goods and services would either be not provided or underprovided in a free market or public market. Public goods like street lighting and law and order. Also, public servants like healthcare education would be provided in insufficient quantities. Therefore, to optimize social welfare, there is a need for government intervention through taxes and direct public provisions. We may dislike taxes, but we would dislike not being able to see a doctor. There are concerns that new technology and automation will lead to job loss and some people losing out. If our job is threatened by new technology, is fear justified? Economic analysis suggests that there is a fallacy that new technology leads to permanent job losses. This is known as Ludate fallacy. Through some jobs are lost, new ones are created. Automation and new technology are not guaranteed to make everyone better off, especially in short terms. So, this was some of the examples with our daily life which in which I try to explain some economic terms. Thank you.